Folks, it was a holy smokes, this ain't no jokers day in the public count here day. Two very serious moves I made in the public count here day. I added Nvidia stock to the public count, and I also added Sofi stock to the public account here today. I added 3,000 shares of Sofi and 33 shares of Nvidia, around $30,000 worth of Nvidia stock and around $20,000 of Sofi. And I got those proceeds basically from Meta. I sold some Meta shares. So we have some things to speak about in today's video. There's two core things I want to go through in today's video. One is Nvidia. A lot of people want to categorize this as a hype stock, right? I do not see a hype stock. I see an undervalued asset. I'm going to take you through every bearish point. I've listened to the bears talk about Nvidia for the past year. I'm going to take you through every single bear point on Nvidia here today and absolutely decimate it. The second thing we're going to get into is why Sofi stock is a very good value buy for growth investors. And so I think that's it's not always you can find a good value out there as a growth investor. And I think Sofi represents that. And the thing we'll speak about at the end of today's video is actually a question a friend asked me, which I thought was a really good question. I thought we should speak about this in this video here today. Why not trim Meta more, sit on some cash for volatility, add on that? So I thought that was an important subject, right? Now, before we get into that, how's it feel? I bought Nvidia in the public count late 2018, early 2019, and then I sold it for short-term profit. And, now I'm buying the stock back at way higher prices than where I held it back in the day, right? How's it make me feel? Well, first thing is the public count's done tremendous over the years, right? These numbers are calculated by Fidelity Investments. Obviously, the performance, the outperformance versus S&P 500 versus bonds, anything like that, it's been a night and day difference, right? But I'll be honest, I could have probably been doing 30% plus a year returns if I had held on to Nvidia, because Nvidia's gains over the years have been absolutely ridiculous, right? And I think the lesson of this all is, at the end of the day, don't chase breadcrumbs. Go after the entire loaf of bread, right? In regards to Nvidia, I chased breadcrumbs. I bought the stock, I made very quick gains on that, and I cashed out. And ultimately, I should have just held through in the end. Same thing happened with ELF. I hold only 1,000 shares of ELF in the public count here today when I used to hold thousands, right? ELF's another good example of, chase some breadcrumbs there. I should have just held through for the long term, chase the loaf of bread. And I mean, imagine if I just held all my ELF shares. What would my returns be per year over the last 5 years if I had held all my ELF shares? I mean, it would be astronomically high, okay? So let that be a little gem dropper before we get into this, okay? Appreciate you guys joining me as always. All I ask in return, gently tap the like button. Somebody yesterday, they said they smash the like button so hard they nearly broke their phone. So just please gently tap the like button here today. I appreciate you guys, okay? And also make sure you subscribe to the channel. Got a brand new free workshop for you guys. Over 2,000 you have gotten this so far. How much money you need to retire, quit your job, focus full-time on investing, all those subjects it covers. That's going to be the pinned comment down there. It's absolutely free to access that. Alrighty, guys, let's get into this. Nvidia. Where do we start with this baby? It's just a hype stock. Oh, really now? So, here's Nvidia over the past year and what's happened with their revenues over the past year. They went from $6 billion a quarter to $7.1 billion a quarter to $13.5 billion a quarter to $18.1 billion a quarter to this latest quarter they did over $22 billion of revenue in a 3-month span. And they also forecast it for a much bigger number this upcoming quarter. Gross profit, they went from $3.8 billion in gross profit to $4.6 billion in gross profit to $9.4 to $13.4 to getting close to $17 billion in gross profit in a 3-month span, right? And that's just transpired in this past year. Now, operating income has over 10x for the company. Operating income went from $1.2 billion in the quarter ended back January 2023 to this latest quarter ended in January 2024. They did $13.6 billion of operating income in that 3-month span, over a 10x there. Absolutely incredible, right? On top of that, if we look at revenue growth for this current year expected, 81% plus. This is analyst estimates, right? Who knows? They might outgrow that. We'll see. And then for next year, analysts only have them growing at about 20% roughly, right? 19.69% on average. So the moral of the story is, at least in regards to this first part, it's not just a hype stock. Hype stocks are stocks where there's no numbers there, there's no fundamentals really backing it. The stock price is just going up based upon a story, based upon excitement. In regards to Nvidia, this is not just a story, this is not just excitement. This is real concrete numbers. When you over 10x your operating income in 1 year, it's ridiculous, okay? The numbers are there. We're talking about this company is going to do well over $100 billion of revenue this year. Well over $100 billion. The numbers are there. It's not just hype. It's not just, pie in the sky stuff. The numbers are there. The profits are there, okay? First off, okay? Next, the bears will then say, well, their customers are clueless. And their customers are just caught up into the AI hype cycle right now, right? So they're just placing all these orders right now because they're in this crazy AI hype cycle. And so their customers, they're just clueless. They don't know what they're doing. That's what the bears are saying, right? Oh, really now? Okay, so who's NVIDIA's biggest customers? I'll tell you their biggest customers. Their biggest customers are Microsoft, Google, Meta, Amazon, Tesla. These are their biggest customers. These are the ones that are ordering the most chips, right? First off, we know all those companies are very well capitalized, right? Every single one of those companies pours in money quarter after quarter, is going to continue to. They've all got the strongest of the strongest balance sheets in the world, right? Secondly, these bears think they know more about business and running a $1 trillion company than Satya Nadella. They think they know more than Sundar Pichai. They think they know more than Mark Zuckerberg. They think they know more than Elon Musk and Andy Jassy. Talk about arrogance, right? The fact that these bears think they know more than the most accomplished CEOs in the world that have done amazing things with their companies and their businesses over time is rather laughable. These guys are not just spending money to spend money with Nvidia because, AI hype, it's cool. No, they're spending this sort of money because the chips that Nvidia sells are going to dramatically increase these companies' business over the next 5, 10, 15, 20 years. That's why they're doing it. They're not doing Nvidia any favors. They're not like, Nvidia, please let me spend hundreds of millions and billions of dollars with you. Please. Just for the fun of it, because I don't know what else to spend on. No, they're doing that because they know that whatever they spend is going to hopefully get them 5x, 10x, 20x back long term, right? That's an important thing to understand about that. Next up here, let's destroy this one. Well, their customers are ordering lots now, but they might just stop ordering chips in the future, right? That's the next bear point they talk about. Well, there's a word in the Oxford Dictionary called competition. So, let's say you are Microsoft and you're like, you know what, we're just going to stop ordering Nvidia chips because you know what, it's costing us a lot of money and so, we're just going to make that decision. Okay, you can make that decision. And then guess what? You fall behind all your competition. Now you just lost your market opportunity. Without the chips that Nvidia sells, you can't make the applications run the way you need them to run. You can't train the models the way you need to train the models without Nvidia chips. So you're forced to continue to buy these chips. And every time Nvidia launches a better chip, year after year, you better go buy it. Or guess what? Your competition's going to come eat your lunch. And it's not just the other big companies. It's also startups that are working on this stuff that everybody wants to win this game because they know this is hundreds of billions of market cap opportunity over time or trillions of dollars for these next battles they're trying to win. And if they miss that, if you let somebody else get the main market share in LLMs or robotics or whatever other industry you're competing in, software or whatever, you just lost your company, the big one, right? So you can't do that. You can't afford to just say, you know what? We're not going to buy Nvidia chips. You could do that and you just lost. And guess what? You're going to be out as CEO because your board of directors is then going to vote you out because they're going to be like, this guy is clueless. He's not setting up the company for the long term. The shareholders are all going to be mad. They're going to sell the stock and out you go, right? So you got to do it. So that's destroyed. Oh my gosh. Well, AMD and Intel will make the same chips as Nvidia and destroy Nvidia's profit margins. This is the next thing the bears like to say, okay? Okay, alrighty. Intel, all right. Intel's 5-year performance, the stock's down 21%. I mean, the fact that I even got to talk about Intel in this video is rather laughable. I mean, that just shows how, I would say, completely lost the bears are in regards to this, that they want to bring up Intel in regards to this. And Intel, AMD, they're going to come eat NVIDIA's lunch, and NVIDIA's profit margins are going to be destroyed. This is the same Intel that in the past 5 years has gone from $71 billion of revenue to $54 billion of revenue. The same Intel that went from $42 billion of gross profit back in 2019 to $21 billion of gross profit in this most recent year. The gross profit's been basically cut in half, down 50%. Intel is not a factor. If you think Intel is Nvidia, whoo, baby, you should not. You need your own personal financial advisor. You need to put your money in a savings account. You need to never touch investments again, okay? If you think Intel is Nvidia, they're not. So that leaves AMD, right? AMD, great company, very good company. What Lisa Su pulled off at AMD, remarkable. I mean, AMD was nearly a bankrupt company. What she's done is amazing, right? With that being said, there's some big differences between Nvidia and AMD, okay? This is the latest quarter for Nvidia's revenue growth, up 265% from a year ago, right? Now you would think AMD's got to be somewhat in the ballpark at least if Nvidia's experienced as much growth. No. AMD's revenue growth was up 6% year over year versus 265% year over year, okay? So Nvidia and AMD, really, they're not even on the same track, to be quite honest, okay? I gave a track analogy here of Usain Bolt is NVIDIA. He's way out here in front, and AMD's behind. There's hope that AMD can catch up to NVIDIA. But the problem is they're trying to catch up to somebody that moves faster than them. NVIDIA moves faster than AMD. So they're trying to catch up to a Usain Bolt. But the problem is, in order to catch up to Usain Bolt, you need to be faster than Usain Bolt. And you're not. So that's where you run into a lot of trouble here, right? If you're an AMD. CUDA, right? NVIDIA software here. That's another factor that, I mean, just to be quite frank, NVIDIA has been working on this for so many years, and they're so out in front of their competition, and they're kind of slowly, in my opinion, they're kind of creating a little bit of a walled garden situation that I think is going to be hard to want to swap and use other companies' chips. Whether that be an AMD, which that's really the only other even remote potential factor would be somebody like an AMD, right? And also another factor to keep in mind is AMD and NVIDIA can coexist. This is a 5-year chart of these stocks. NVIDIA is up 1,900% in the past 5 years. AMD is up 587% in the past 5 years, right? So AMD just simply, they can't destroy NVIDIA's margins because in order to destroy NVIDIA's margins, they've got to create a software better, then they've got to also create chips that are ahead of NVIDIA or equal to NVIDIA, and then they can destroy. That's just unrealistic. That's like, if you understand tech, like you understand, like that's, you can't just do that, okay? So that's impossible, and also AMD is doing just fine on their own. They're running their own race, and good for them, okay? But the fact that people want to try to say these sorts of things just shows me, they're lost on as far as how this technology works, right? The next thing the bears will say, and I've heard them say this, is, well, NVIDIA's current customers, they're all going to make these chips like the new Blackwell chip, and, it's basically going to cut NVIDIA out of the market. So Meta's going to come up with these chips, and Amazon and all these other companies, right? Which, by the way, I own Meta. I own Amazon. Big positions for me. Meta's by far and away the biggest position. I wish Meta could create what NVIDIA's created, okay? But here's the bottom line, okay? NVIDIA's a $2.2 trillion market cap now at this point in time. It's likely going to climb to be the largest market cap in the world, right? Everybody wishes they could create NVIDIA chips, but they can't. If Meta could make a Blackwell chip today, they would make as many as they flippin' flapjacking could. And guess what? They would also sell it to everybody, so then they could have another $2 trillion plus market cap on their company as well, right? Same thing with Amazon, same thing with Microsoft. Everybody wishes they could do that, but they can't. They can't do that, okay? That's not like possible. You're going to have to spend, Jensen said $10 billion in development for this chip, right? So first off, the ridiculous amount of spend. Secondly, you need the workforce to do that. But also, if you're trying to create, let's say, a Blackwell chip today, it's going to, even if you can do that, let's say you can hypothetically do that. Let's say Meta, Amazon, whoever can create a chip that's just as powerful as Blackwell. It's going to take years to do that. You don't just like, woo, we made it like we made a pizza in the oven. It took us a couple hours here and we're done. No, it doesn't work like that. Even if they could catch up to this chip, it's going to take years to get there. Meanwhile, Nvidia keeps releasing more powerful chips. Guess what? Do you think Nvidia's got more powerful chips coming next year? Yup. Do you think they got more powerful chips coming the following year? Yup. It's not like Nvidia just like, oh, let's take our foot off the gas. Let's not create anything. Let's not continue to innovate. No, they're going to continue to innovate. They're going to continue to push the pedal down, right? And I showed this, I think it was in a video yesterday or the day before, what Elon Musk said on the conference call back in the summer of 2023, right? And, even Tesla's got one of the most unbelievable engineering teams workforce in the world. They can't create these Nvidia chips. Elon Musk says, they've been kind enough, Nvidia's been kind enough to send us some of these chips. He said, they could eliminate Dojo, but they can't send them enough GPUs right now. And so if even Tesla can't do it, it's tough. That's tough, okay? They're running out of things, okay? Running out of options. So this sticks. Well, it's overvalued, right? Let's speak about that. Oh, got him. Nvidia trading at a forward P at the, let's call it a high 30s, right? Somewhere in there. Some people have it at 35, 39, 33, 37, somewhere in there roughly. Let's just call it high 30s, right? So that's roughly 2x where the average stock trades at. So, boom, got it, right? Overvalued. Well, maybe not so fast. First off, Nvidia's forward P might not even be right. If you look at the last several quarters, Nvidia beat by 8 cents, 17 cents, 61 cents, 63 cents, and 53 cents as far as EPS goes. So Nvidia is a company that beats pretty much quarter in, quarter out in terms of earnings per share. So there's very much a probability that what analysts have for earnings per share is actually not accurate and it's far too low. That's first thing to factor in. Second thing to factor in, right, is look at Nvidia's growth rates. Nvidia is expected to grow, 90% this year, let's say, for instance, revenue, right? Guess what? That's like over 10x the average stock in the stock market. So the valuation is 2x or maybe even less than 2x the average stock in the market, yet the revenue growth is over 10x the average stock, right? And then if you look at the following 2 years, analysts have a big slowdown in revenue growth, but that's still 3x. And the company's trading at the most 2x what the average stock trades at. So when you look at it from that context, this company is extremely undervalued. And also you should pay some sort of premium for one of the best companies of the past 10 plus years in the stock market, right? For one of the greatest companies, period, in the world right now. There should always be a premium you pay. And I don't think the premium's nearly as much. I think right now, Nvidia should be trading at between a 75 and probably about a 95 forward P when you look at the growth rates of this company. Microsoft, listen to this. Nvidia and Microsoft trade roughly in similar forward PE ranges, right? No disrespect to Microsoft, but they don't even have remotely close to the growth rates that Nvidia does, right? And so when you look at it from that context, trading roughly same forward Ps with growth that's not even in the same ballpark, that's crazy, right? So that's another factor to kind of think about here. So the whole overvaluation thing is just, it just doesn't hold weight at all. So the bottom line is, right, the bear case is dead on Nvidia until revenues start to downtrend on the stock. And so when I look at Nvidia, when I think about obviously their new chip in the market, when I think about the $4,500 per GPU per year opportunity, I do not see revenue downtrending for 2024 or 2025. I think those are safe years just in general in terms of just continuing to see that revenue climb bigger, and bigger. So that pushes you out to 2026, 2027, 2028 to think about like when Nvidia revenues start going down. You got to push out all the way to those years. And once again, when you got a stock that's not even overvalued, that's where you run into some real issues here if you're bearish on the stock. So when I look at Nvidia, I think every dip in the stock is going to continue to be bought for quite a while. And I mean quite a while. Up until the day when Nvidia's revenues go the wrong way. But I think trying to predict that in 2024 is a lost cause. And I think if you're trying to predict that in 2025, I think that's not looking so good either. So then you're trying to predict out 2026, 2027, 2028. And you know Nvidia's got new products and services coming in the market over that next 1 to 2 years that are going to be new revenue growth opportunities. So at some point in time, sure, Nvidia will have its judgment day. Nvidia will have its revenue go down, but that could be 2 years from now. That could be 3 years from now. That could be 5 years from now. It could be 7 years from now. And so the people that want to continue to bet against the stock, it's a dangerous proposition. And they continue to lose, and they're going to continue to lose because every dip in the stock is going to be bought for quite some time, right? Also, analysts, fund managers, high net worth individuals, retail investors, I think they're going to begin to understand this story and what's going on with Nvidia much better over this next 6 to 12 months than they have over the past 12 months. The past 12 months, all people did was just like, oh, it's going up a lot. It's got to be overvalued. It's hype. It's blah, 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 right? I think more and more individuals are going to pour into this stock over the next 6 to 12 months because they're really going to start to understand the story, what's going on the chip side, what's going on the software side, and really start to figure out like, wow, is there an opportunity here in Nvidia? Maybe is something meets more than the eye than just like, oh, it's hype. It's excitement, right? I think some bears will flip over to the bullish side, right? And some will put their pride aside and say, you know what, I was bearish on the stock, but you know what, I shouldn't be bearish on the stock. I think that's going to happen to some, right? There's a great saying. It says, just because you took longer than others doesn't mean you failed, right? And I think that's always such a great saying. Just because you took longer than others doesn't mean you failed. I learned that in track firsthand, being a sprinter. I was never going to be the fastest in the world. Like, are you kidding me? No, that's not going to happen. The bottom line is I wanted to work my butt off, become as good as I could possibly become, prove to myself I could, be a success and get better and better at something if by putting in the work. And that's what I proved. And I was able to earn a part scholarship with that and all those sorts of things, right? Running my own race. YouTube. I'm never going to be the biggest person on social media, but I still got 4 silver play buttons in the house and I've had plenty of success, right? I don't need to beat everybody. That's the bottom line with that. Tesla stock. When I got invested in Tesla stock, it might seem like it was so long ago, but the fact is the stock had already gone up a ton since IPO. I could have looked at that and been like, oh, I missed the opportunity. I could have let my ego get in the way and say, I'm not buying it because, I should have bought it at IPO and I could have already made 10,000% or whatever the amount was, right? I could have easily looked at it like that. I didn't. I put my ego aside and said, you know what? There's a great opportunity. There's money to be made here. There's an undervalued asset, and it is what it is. And so that's what you have to do as an investor sometimes. You got to put your ego aside. You got to just look at it practically. Is there money? Is there good money to be made in this such and such thing? And if there is, you take that opportunity, right? And I view something like an Nvidia as like a stock I should own. And I view that as a stock that there's money to be made there. And, if the stock dips in any substantial way, I'll be there to buy it. That's the way I view that one, okay? Let's get into SoFi. Then we'll talk about Meta. Why not sell more Meta shares, okay? But let's talk about SoFi for a moment. Got the position started here in the public count. I bought some shares recently in my Ally account, right? And now I got a position in the public count also started, which is kind of the granddaddy of them all. So 3,000 shares here to start, and paid $6.94 for those shares there, okay? So in regards to SoFi, I told you guys at the start of this is a growth stock, but trading at very good value, right? And so what I see here is a company that if we go back to 2019, net interest income, which is kind of the holy grail metric for banks, right? Which SoFi, although it's tech related, it's online, it's NAP, all those sorts of things, Galileo, it's still a bank, okay? So net interest income is always the most important for these companies. It took it from $329 million in net interest income in 2019 to this past year, $1.2 billion plus in net interest income for SoFi. And don't be surprised at all if that number climbs considerably more in 2024. The operating income, it actually went from an operating loss. If we go back to, this is just in the past few quarters, December 2022 quarter, they had an operating loss of over $37 million. They took that to a $51 million operating income in this most recent quarter. Net income went from December 2022, that quarter they had a $40 million net loss. They took that to almost $48 million in net income in this most recent quarter. So the numbers are increasing rapidly, right? If you look at their latest quarter, they beat on EPS, they beat on revenue, very nice beat on revenue, $22 million beat in terms of revenue, right? And then we look at the valuation of the stock, trading at, you're going to look at 2025 and 2026 numbers since it's a growth stock, right? And you look at this company, 2025 trading at about a 29, forward P based upon the expected 2025 numbers. The following year, 2026, based upon what analysts have, that's a 14 PE on 2026 numbers. And this is a company that in 2025, analysts had them growing 17% revenue, 20% revenue in 2026. Something just doesn't add up there, right? The valuation is just far too low considering the growth rates of SoFi expected over the next many years overall. So here we have SoFi currently, right? They have an all-time high members, and that number should continue to grow. They have an all-time high net interest income, and that number should continue to grow. They have all-time high profits, and that number should continue to grow. And the company's well positioned for really any economy. I looked at what, Anthony Noto's kind of positioned the company. I think he's positioned it very well for really any economy. And yet here the stock is at near all-time lows. Literally, SoFi stock's pretty dang close at this point in time to an all-time low. While everything in the fundamentals of their business is at all-time highs. So this is where, the old saying Warren Buffett about, in the short term, the stock market is a voting machine, and long term it's a weighing machine. This is a perfect example of this. When you got a company's fundamentals all reaching all-time highs, and those all-time highs should continue to go further and further, and yet the stock price is near all-time lows. So that's where I look at a stock like SoFi and I'm like, this is a pretty tremendous opportunity, and I'm willing to risk some on a stock like this, right? And the thing to remember with me with banks is I don't even like banks. Banks are blah for me. Like 15 years in the market, I've only owned 3 banks. JP Morgan, Goldman Sachs, and now SoFi. So for me to ever own a bank, it's got to be a really attractive opportunity. And when I bought JP Morgan back in the day, I thought it was a really attractive opportunity. And by the way, it was. When I bought Goldman Sachs, I thought, man, this is a really attractive opportunity. And now I'm buying SoFi, and I think this is a really attractive opportunity. So for me to buy a bank, it's a big statement. That means there's got to be something here, okay? So we'll see where SoFi goes over the next few years. But I like that one. I'll continue to probably build the position bigger in the short term. And, we'll see where I take it. But, it's certainly not a stock I want to have my biggest position in or anywhere close to that. But is it a stock I'd like to own a lot more shares of? Yeah. Could I see myself owning 10,000 shares of SoFi in the public count? I could see that. I would love that, actually. It's Meta. So, a friend asked me this today. I thought, man, this is great for a lesson. I wanted to speak about this, right? Why not trim Meta? Sit on some cash for volatility, add that. So there's 2 main points, but the third point I'll say is I'm not a trader. Try to get in and out of the market and play that game of like, let me sell Meta now. It might drop to 440. Let me buy it back at 440. Not my game. Not my game. That's more of a gambling game, in my personal opinion, than an investing game, okay? I'm trying to always make decisions that I'm going to be happy with years from now. See this right here? Number 1, right under Jeremy Lefebvre's hotel, the Flapjack Flipper Resort. Build a portfolio you'll be proud of years from now. If I think about my move I made with Nvidia today, if I think about my move I made with SoFi, those are because I think I'm making the right moves for the next several years, right? And so to try to make a short-term decision in and out, that's not a long-term decision, right? I'm trying to make decisions that I'll be proud of years from now. So first thing is I already have a good amount of cash, so I don't really need to build up cash bigger. Secondly, in regards to Meta, is the stock's not trading expensive. If I look at analyst estimates, I think they're too low for this year and next year, for 2024 and 2025. Them doing less than $20 of EPS on average, 43 analysts cover the stock. I think that number's low. I think it's very low. Also, next year, them doing $23 of EPS outside of a big recession hitting next year. I think that number's low as well. And so when you look at the valuation, 24 forward P, 21 for 2025, and you look at the revenue growth of double-digit revenue growth, that's just too low of a valuation. So when I look at Meta, it just doesn't make sense to try to cash more shares of this. I did my little bit here today to start my SoFi position in Nvidia, but to cash a bunch more, it just doesn't make sense at the end of the day, okay? The weighting is really heavy in regards to Meta. It's not ideal. I mean, even after today's cut, it's still 40% of the portfolio. I wish it wasn't like that, but at the same time, it's like that, not because I put that much in to make it 40%. It's because it went up $637,000. And so if you have a stock go up $637,000, it's going to become a very big portion of your portfolio. And that's what happened there with Meta, okay? Appreciate you guys joining me as always. Hope you got a lot of value out of today's video. I appreciate each and every one of you for enjoying this here today. Pin comment down there. Get my new workshop, 2,000 plus. You guys have gotten that so far. If you have not gotten that, Make sure you get that. It's a 20 to 25 minute video, goes into how much money you need to retire, quit your job, focus full time on investing. All those subjects are covered in that one. Much love and have a great day.